So the Fed raised rates by 75 basis points. Some expected 100, but alas, this is where we are. And with midterms around the corner, even a rate rise at the bottom end of the forecasts was never going to be good news for the Democrats. But it's worth considering that the recent CPI data that sent the market into a frenzy primarily went up due to rental costs. Otherwise, inflation was heading lower. So you have to ask yourself, how does a rate rise help that trend? Perhaps the better question to ask is, how does a rate rise put pressure on rising rental costs? Well, if mortgage rates push higher, the result could be a move lower in US housing prices. Be warned. In the markets, the dollar index ripped, the S&P fell 1.7% and Treasury yields declined. And in crypto, well, it kind of held its ground in that it failed to penetrate key support levels. It's also worth remembering the building regulatory pressure on both Bitcoin and Ethereum threatens to overshadow macro developments. However, today in early European trading, crypto is bouncing back quite substantially, with Bitcoin and Ethereum both above the 3% handle. Where we go from here is unclear, but we can't forget that the Fed looks determined to create a downturn to crush inflation, and both blue chips are facing regulatory scrutiny.